Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Sofi Technologies' SOFI stock. In this video, we will be analyzing two articles, to where the first one is titled, 5 Investors Betting Big on Sofi Stock in Quarter 2. So we're going to be talking about some major institutions and investors who are doubling down on their position in Sofi Technologies. We'll also be talking about their latest news updates, upcoming catalysts, price targets, and where this company could be in the future in regards to their overall share price. After that, we'll be analyzing an article titled, Don't Count Out Sofi, Why This Fintech Giant Remains a Long-Term Bet. And if you're not familiar with my channel, I am a long-term investor, and I've been advocating for people to look further into Sofi Technologies for a long time now. So we're going to discuss their long-term growth trajectory and why I still am invested into this stock, and I have not sold out of it as of yet. So with that being said, don't forget to go and annihilate that like button right now. Go ahead, go and press it right now. Subscribe if you are new. Don't forget to become a member of this channel to support me personally for as little as 99 cents. But don't worry, if you don't want to become a member by subscribing, you're going to get this content for absolutely free. And with all of that being said, I say let's dive right into today's stories. Sofi Technologies, ticker symbol SOFI, is a fintech company or a financial technology company that essentially operates as a digital bank. Sofi Technologies' share price has pulled back recently after their second quarter earnings report. However, I would say this is somewhat overblown considering that Sofi has reported new members at an astounding rate. For instance, they added 584,000 new members, now totaling over 6.2 million members as of June 30th. This would represent a 44% year-over-year growth rate in regards to their members, and this is a quite impressive growth rate for their overall membership. On top of that, some investors are saying that this company is too overpriced right now according to their price-to-sales ratio, and let me say, yes, in one sense they are overpriced and trading at a premium because right now their price-to-sales ratio is around 4.19 times. As a comparison, banks like Bank of America, ticker symbol BAC, and J.P. Morgan Chase, ticker symbol JPM, trade at around 2.42 times and 3.10 times respectively. So clearly Sofi's multiple is higher than Bank of America and JP Morgan. However, I would more side with the counter argument saying that Sofi Technologies deserves their higher price to sales ratio because their growth is far greater than Bank of America and JP Morgan. Therefore, it deserves a higher PS multiple because we need to take these multiples and accounting ratios in light of their growth rate, and considering that Sofi is adding more customers on a percentage basis and increasing their overall revenue on a percentage basis to a greater degree than Bank of America and JP Morgan, I would say that Sofi deserves a higher PS ratio due to their higher percentage growth rates. On top of that, Sofi does remain unprofitable unlike the other two companies we mentioned. However, critics can only say this for so long because eventually Sofi Technologies will become profitable. If you're familiar with my previous videos, I think Sofi Technologies is going to become profitable either before 2024, meaning by the end of 2023, or in quarter 1 of 2024. And honestly, I think they are going to become profitable in quarter 4 of 2023. So bears, naysayers, and critics are running out of time before they have to stop saying that the company is unprofitable. And I think once the company becomes profitable, the future growth rate of this company is going to be phenomenal. Now, apart from this, let's track their overall institutional ownership, which is very important. This shows us what major companies are buying into Sofi Technologies, because as these larger companies and institutions are investing into Sofi Technologies, clearly these larger institutions want Sofi to do well, and they also believe Sofi will do well over the long term. These larger institutional investors provide liquidity and support for Sofi Technologies, and as of quarter 2, there were around 486 13F filers who disclosed a stake in Sofi Technologies. The problem is that this actually represents a decline by around 19 filers, which is not advantageous, but I will say that their top 5 actually added shares of this company, and that's what we really want to look at. The top 5 would be Vanguard, BlackRock, Silver Lake Group, DE Shaw and Company, as well as State Street. I have particularly highlighted Vanguard, BlackRock, and State Street because these are the major players that we want invested into this company. For Vanguard, they own around 73.83 million shares of Sofi stock, and they have acquired recently 4.26 million more shares during quarter 2. Similarly, BlackRock owns 38.12 million shares, and they acquired 2.3 million shares during quarter 2, while Silver Lake Group has 31.15 million shares, and they did not add anything in quarter 2, while D.E. Shaw and Company added 11.59 million shares, more than the other three combined, to now have a total of 15.53 million. And then lastly, we have State Street, which has a decent position of 13.68 million shares, and they recently acquired 1.56 million more during quarter 2. So this institutional backing is very positive news for SoFi Technologies in general, and we as retail investors need to look at this and say, hey, these major institutions are buying up this company. Maybe there is future upside left in this stock. And that's exactly what we're going to talk about when we analyze our next article. We're going to be talking about their price targets, some upcoming catalysts, which we already touched on, regarding their profitability, and why investors should hold this company over the long term. So let's see what this stock reporter has to say. Right now, SoFi shares are actually pulling back, and they've pulled back into the single digits as of right now, trading close to $8.60. And as the company trends lower, this is the time to accumulate shares. In my opinion, you do not want to accumulate or buy shares while the company is going up in their overall share price. That is a sure way of how you could lose money when the company inevitably pulls back, because the stock market is very volatile. Instead, I would rather buy companies when they are trending lower in their overall share price, and that essentially guarantees me to have somewhat of a competitive price. It puts me in a far better position for when the company inevitably, if it's a good company, ends up having a resurgence in their overall share price due to their long-term growth prospects. And since I'm a long-term investor, I can wait for the next 5 to 10 years for this company to make back any potential losses. Now, I understand how some investors might be frustrated with SoFi Technologies pulling back recently, especially those who bought in during the post-earnings surge. But now, since the company has pulled back, you are clearly going to be in the red right now, and the only thing that shows me is that you haven't watched my previous videos, which stated that the company was going to have a pullback. However, we don't want to mix the near-term price action of this overall stock with the long-term price action, because in the short term, the company is going to be very volatile, going up and down in price regarding their recent earnings report. But the long-term growth potential of this stock is completely intact. This stock and company is a disruptor in the industry, and their long-term growth prospects and forecasts remain completely consistent and intact with what professionals are projecting. So therefore, the chances of a higher share price in the next 5 to 10 years than the current share price right now remains extremely strong and compelling for investors. SoFi Technologies' recent moves may even be very favorable even for recent investors, and here's why. Based on current metrics, such as their total deposits as well as total member growth, which we briefly touched on in the last article, things are continuing to move in the right direction, particularly regarding their total deposits. Also, as they continue to add more members, this is going to positively impact their overall deposits, their revenue, and earnings. But despite this good news, there are some very critical analysts, such as a Morgan Stanley analyst who is not as bullish as I am. A sell-side analyst from Morgan Stanley has complained that SoFi Technologies' valuation remains too inflated, and his bearish sentiment says that the company's rich valuation is too high compared to previous stocks. But just like we said in the previous article, SoFi's overall valuation is justified based on their growth rate, because you're comparing them to other stocks that have a lower growth rate on a percentage basis than SoFi. Due to their higher growth rate percentage basis in CAGR, which is their compounding annual growth rate, that offsets the rich valuation. Now, clearly, if you can buy this company for a cheaper share price for lower valuation and accounting ratios, such as their PS and PE ratios, then feel free to do so. But if you're willing to keep this company for the next 5 years, this company will more than grow into their valuation. However, some analysts are not in agreement over this. For instance, another sell-side bearish critic analyst had a similar conclusion to the Morgan Stanley analyst, and we even have an investor play stock reporter stating, and I quote, "The valuation has overshot the fundamental earnings outlook," end quote. And let me agree to disagree. Yes, it has overshot the overall fundamentals earnings outlook, but that's because this is a growth company. The whole point of buying the company now is because we believe in the next 5 to 10 years it's going to be at a greater price 5 to 10 years from now. And I think that their earnings 5 to 10 years from now is going to be substantially greater than their current outlook, which is only estimated out to the next 12 months or 1 year. So clearly, if you have the mindset of a long-term investor for SoFi Technologies, this company is doing very well. That's why this stock reporter says that he wouldn't jump to the conclusion that the downside risk outweighs the upside potential. Essentially, he's saying that the risk to reward ratio here is very favorable for long-term investors. With the company's share price currently hovering at around $8.60 per share, he says that the company has the potential to go to around $15 per share. Now, let me add my own criticism here really quick. I don't think the company is going to get to $15 by the end of 2023. I think that is somewhat unrealistic, and I don't think that investors should have that in their mind when investing into this company. Since the current share price is trading at around $8.60, from here, we don't know where it's going to go over the next 12 months. We have very bearish negative analysts who believe it's going to trend further downwards to around $6 to $7, and then we have more positive analysts who believe the company could achieve $9 to $10 over the next 12 months. And I'm not alone in this. For instance, a Mizuho analyst recently argued that the market could be underestimating the growth potential that is presented by their upcoming catalysts, which would include the end of the student loan repayment moratorium, which we have covered exhaustively in previous videos. So with the upcoming catalyst of the student loan repayment moratorium, as well as the company achieving profitability before year's end, these are very positive catalysts that are going to increase their overall share price. However, investors are going to have to wait for those catalysts to be actualized before they receive a higher share price. And in the meantime, before these catalysts, clearly the share price could go further down, particularly as we enter the end of August, in September, or even after September. This is when the stock market cyclically starts to trend downwards. However, after that point, we see a huge resurgence in stock prices as we move toward the holiday season. The main conclusion and takeaway that I want you to be aware of is that if you currently own SoFi Technologies and you're not already overexposed more than a 5% initial portfolio allocation, right now I think is not the best time to sell. Rather, I would wait for these catalysts to be actualized when the company has their share price return to its actual value based on their current growth rates, and then you can think about taking some profits and selling, but still keeping a strong foundation for long-term growth prospects. In fact, if you already owned this company, I would remain very bullish about the company's long-term forecasts, but if you can't stomach the short-term volatility of this overall stock, then you may want to just take profits and get out, because being a long-term investor may just not be for you. Also, this is going to depend on your portfolio, your age, your investing variables, your investing strategy, and multiple other things. I can only communicate to you my thought process, how I invest, and what I'm doing. In the end, SoFi Technologies seems to be very fundamentally solid. They had a phenomenal earnings report, and they have a B grade rating in Portfolio Grader, meaning that the future upside potential of this company radically outweighs any potential risk. But even with that being said, don't forget to have a diversified portfolio, invest into strong fundamental companies, and feel free to tell me what you think about this company down below in the comments. With that being said, I would love for you to go and annihilate that like button if you made it all the way to the end of the video. Don't forget to become a member of this channel for as little as 99 cents to support me personally so I can stay here on YouTube. And with that being said, I will see you in the next YT video.